Good morning, good afternoon, and good evening, folks. If you guys can hear me loud and clear, and if you can also see my screen, please do give me a sound check by saying yes or no, so that I know that you guys can hear me well, and you can also see my screen. Great, thank you, Bongivi, if I'm pronouncing your name correctly. Thank you, Sandra, for the confirmation as well, and thanks to everyone else. And welcome to our master series. Every single Wednesday at this time, we cover various different topics, and today's topic is about trading indices. Now, of course, we do cover all the basics in relation to trading indices, but at the same time, what we also do quite important, rightfully, is that what are the markets talking about these days? Now, what do I mean by that? What we do is we filter out the noise from the market, pay attention to the main and important factors that needs attention from investors and traders, and the news which is really important and going to push markets, and leaving everything out. That is the focus for our webinars, and that's exactly what we do. Now, with that in mind, let's begin. And I wanted to encourage everyone throughout the webinar, if you have any questions at any stage, please shoot them straight away. As we go along, I will keep an eye on the questions and I will answer them as we continue to move on with the webinar. Now, a bit about myself. My name is Naeem Aslam. I work as a chief analyst for AvaTrade. My wealth of experience spans over 15 years. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and many of you may have seen me as a regular guest on CNBC, Bloomberg, and other media channels. Now, speaking about the social media channels, and here are the handles for AvaTrade, for Telegram, for Twitter, and for YouTube. I do recommend you guys to follow us over there. Bit of a housekeeping and some announcements before we continue. I wanted to introduce the AvaTrade's unique technology, proprietary product, which is called AvaProtect. It's a revolutionary one-click risk management tool available on the AvaTrade web trader and also on AvaTrade Go app. Basically, with AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading account. Of course, the only cost is the AvaProtect fee itself. Now, the agenda, what we're going to do is, here are some of the study questions. Some of them are very same, as I said, mentioned previously, because every single week we get a lot of newbies joining our webinar. So we wanted to continue with building the foundation for them, and then take the conversation to a different level where we could look at the market fundamentals, the worries, the anxieties among investors and traders. Where is the noise and what is the reality? And more important, if there are opportunities between them. As always, before I begin, it is important for me to go through this brief disclaimer. Anything which will be discussed is purely for education purposes. The full disclaimer is right in front of you. If you have any questions, please feel free to get in touch with your own account managers. Now, for those of you who have actually already attended our webinars, this is your opportunity to revise and at the same time participate as well. So if you could help me to answer the first particular question right over here, which is why to trade indices. What are indices actually? If anyone can answer that particular question, what are indices? So that's it, right on the money. Yes, Amutha, big moves, present opportunities to trade. Great. So indices are basically a basket, is a one particular product which contains several different stocks within them. So for example, can anyone give me any stock index from the US stock market? I'm going to write one of them over here. So I want you guys to give me an example. There you go. Amutha has said Dow Jones Industrial Average. So that is absolutely right. So the first one is S&P 500 index. Then you have Dow Jones 30. Anyone else can give me one more index, the major index, the tech index in the United States? What is the name of that one? I'm putting it right here. Come on, guys. It's called Nasdaq, okay, or also known as the US Tech 100 Index on our platform. So what do they do? The S&P 500 index over here represents the top 500 stocks in the United States. S&P 500 index is a better representation of the overall stock market. If one wants to measure the performance of the stock market in the United States, of the stock market, you would look at S&P 500 index. Right now, the S&P 500 index year to date is down nearly 14%. Now, what is Dow Jones 30? The Dow Jones Industrial Average, as the name suggests, industrial represents the top 30 industrial stocks. And what this particular index is also down over 10% year to date. Nasdaq, which represents the tech stocks, the top 100 tech stocks in the United States, it is down over 20%. As of yesterday, it was down well over 23% year to date. So the Nasdaq index, without any doubt over here, is the weakest index among these two indices. Right. So the question really now is, why do we trade indices? The reason that we trade indices is for retail traders who have small sum of money, they cannot buy top 20, top 30, or top 50 stocks. They can buy an index and get an exposure to everything. The second reason is it provides great hedging strategy, because you don't have one particular stock in your account which, if it moves to the upside or to the downside, brings big movement for your account. But in fact, doing this one, you have an exposure against top 30 stocks, let's say, if you take Dow Jones Industrial Average. So the risk is minimal from that particular perspective. Third is, for day traders, it is a great way to look for those day trading opportunities. Why? Because what happened is that the index has much bigger moves on a daily basis. So there is a range over here for you guys to trade on, which we will discover, and we will talk about that in a lot more detail in a bit. Now, the second aspect of this particular segment is, of course, the inverse of indices. What do we mean? What do we mean by inverse of indices? The inverse of indices, give me 1 second there, please. Apologies about the noise. So the inverse of indices really represents an index which moves in an opposite direction. So what do we mean by that? on one side, for example, we have the S&P 500 index, or we have the Dow Jones Industrial Average, right? So let's put Dow Jones Industrial Average over here, right? And on the other side, we have an inverse of an index, which is called VIX. The ticker for VIX on our platform is VXXB. Now, generally speaking, and most of the time, when the Dow Jones Industrial Average moves to the upside, meaning a risk-on rally is on, then what we see is we see the volatility index moving to the downside. So whenever you are reading news and then you wanted to figure out what is the noise, what are the implications of that. Now, I want you guys to pay very close attention to this one, because this is something that we have not covered before in our previous webinars. So whenever you read in news, and whether it's a recession, whether it's an inflation, whether anything else, this is a great parameter to measure it, but obviously not the only parameter, but one of the parameters to see if this is a noise or where on traders are actually in relation to that. So if the Dow Jones Industrial Average is still maintaining its move, and the VIX index on the other side, doesn't begin to move off its lows, you could pretty much say that this is nothing but actually noise in the market. However, if the Dow Jones Industrial Average begins to move to the downside and the volatility index begins to move to the upside, you can bet that the news is real, its implications and concerns are real, because now there is time for risk of trade, and the risk of trade really means the volatility index is moving to the upside while the risk on rally is moving to the downside. Right. Does that make sense to you guys? Are you guys with me on this particular subject? Because if you have any questions, now is the time for you guys to really ask that. If you are not sure, please let me know. Yeah? Okay. Okay, I don't mind repeating it. Absolutely. Thank you for asking that. Right. So we have the Dow Jones Industrial Average, your normal index, okay? And then you have a volatility index. The relationship between them is opposite. When this one goes up, this one goes down. When this one goes down, this one goes up. For instance, you hear in news, right? And you don't know if that news is actually noise or if this is a real concern for the market. What you do is you open the chart for the Dow Jones Industrial Average, you open the chart for the VXXB, right, on our platform. You see what is happening. If the market is moving to the upside and the news is good, so you could very much say that, okay, market is taking that as a good news. So this is a risk on day. At the same time, you want to see the volatility index moving away from its highs, because it should fall. Because if it doesn't begin to fall from its highs, then there is a problem, because this particular movement to the upside may not last for long. Now, on the other side, when the news comes in and this moves to the downside and this moves to the upside, then that means that we are likely to see more weakness in the coming days for the Dow Jones Industrial Average. The risk of rally will continue, and we will see more rally for the volatility index. Does that make sense? Okay, great. Now, the fund flow is something that we have already discussed earlier. Fund flow basically represents, if you guys are still, some of you guys are not sure, remember the recording of this one will be available on our YouTube channel, so you can always go and watch that. The fund flow is really something that we refer to is that where are we with relation to the market flows? Now, can anyone give me a little bit example of that fund flow, especially for people who have attended? Maybe Amutha, you can jump in over here. So the fund flow really means where the money is going in, right? And where the money is going out from, okay? Now, when we look at the Nasdaq right at the top of this particular webinar, we discussed that the Nasdaq is the worst index, right? So we discussed that, which is your tech index, Nasdaq over here. So obviously, traders and investors are not really buying technology stocks. What are they buying is commodities or energy stock, because oil prices are going higher. So you look at from sector by sector perspective. You see where is that really moving and where is that really going. So that's what we kind of really focus on, okay? So whether the tech stock is moving to the upside, whether the money is coming from the banking sector, whether the money is going in, you look from sector by sector. You have a consumer discretionary sector, you have an energy sector, you have your tech sector, you have a banking and financial sector. The list kind of goes on. You can check the different sectors of the S&P 500 index on Google, and it will give you all the different sectors on that. In addition to that, the easier way of looking at that is look at the Dow Jones Industrial Average, look at the Nasdaq, look at the S&P 500 index, see which particular one of them is really moving in what direction, and that gives you all the clarity that you pretty much need. Amutha, you're saying sorry, not sure. What do you mean not sure? What are you referring to? Can you please elaborate on that so I can help you guys I can then help to really understand what you guys really referring to, because I don't know what you're referring to. Again, guys, for anyone else who hasn't really asked any question, like everyone else is asking question, this is really your opportunity to ask me as many questions as you can while I am here, so that you learn, because that is the only reason I am here. Money flow in and out of sectors. Okay, so Amutha is saying that not sure about money flows in and out. So again, to repeat that particular aspect, we wanted to see the Nasdaq, we wanted to see the S&P 500 index, we wanted to see the Dow Jones Industrial Average. When you look at the different sectors, we all know that oil prices or the energy sector is very, very strong these days, right? Because oil prices are moving to the upside. So energy sector is actually a sector where we see the prices moving higher day by day, right? There's no doubt about that. Do we agree or not? Do you guys see that the oil prices are going up every day, pretty much, more or less, right? Now, so that means that energy stocks are very, very in demand, because people know that, because of the conflict, things will continue in that direction. So as for the tech stock, do you guys agree or not that stocks like Amazon, Apple, and everything else is very much moving in the downward direction, right? So then that means that money is really coming out from that particular sector. That's what I mean by fund flow. And we can see that by looking at the S&P 500 index on a very high level, and for the Nasdaq, see which one is more stronger. Now everything will fall into place when we will go into the charts, which we are now. So bear with me now while I explain the opportunities. Now everyone in the market is worried about recession right now, right? Because they think that inflation is very high, and you know the chances are the recession is really here. Now what we got to do in relation to the price action is we got to look at the price action and then see what the price is telling us. While everyone is very much worried about recession, and then they think the recession is very much here, right? But what is happening in terms of the price action? So this marks your support zone. The green lines are your support zone right over here, and then you have another support zone over here. So basically you have two support zones on top of each other. What we have seen is that the price was very much moving in the downward direction, right? And it's been moving in that direction for quite a bit of time, because this was the high of the S&P 500 index, because this is your S&P 500 index, and the price did come over here, and then after that we did see a little bit rally. The price formed a lower high over here in comparison to its previous high over here. Now the price is moving again to the downside. As you can see, what we have is we have a lower low over here in comparison to this particular low over here. Now over here, now we could potentially be forming another lower high, and then if the price cannot break above this particular zone right over here, what we're going to see is potentially price falling and then coming into this particular zone or even further from here. So what becomes very clear is that the price is moving in a downward direction. The price is forming lower highs, the price is forming lower lows consistently. That is what we are seeing, right, in terms of that. Now, what about the noise in the market? Where is the noise in the market? Where do we see that? Now, another factor of measuring that noise really is to look at your 50-day simple moving average. This over here is your 50-day simple moving average. And then if you wanted to add or subtract studies from this one, all what you have to do is to go over here, your studies. As you can see, we already have two studies over here. One is your SMA, okay, and that represents your 50-day. This is the color, and then the other one is your relative strength index, okay. So we have two of them. The relative strength index is coming to us near its overbought level of 70, currently at 54, but it is well off it. So everything over here is indicating to us that if the price cannot stay above the 50-day simple moving average, there is only one way for the price to move. Now, Friday is a very important day when we're going to get the US CPI number, and we are highly likely to see the prices moving quite rapidly. So what we wanted to see with that respect is where the price is really going to go from here. Are we going to see a momentum to the upside? Are we going to see momentum to the downside? Once again, the chances are that this is another lower high in comparison to this one, in comparison to this one, in comparison to this one. And we are possibly likely to have another lower low in the coming months or so, okay? Does that make sense? Now, we're going to do the same sort of analysis by looking at the Dow Jones Industrial Average. Once again, we're going to define our support zone. I'm going to delete this particular line because I think that we just don't really need this one. And this one, I'm going to change it to red, because red for me represents my resistance zone. So you can see how I am changing the color. All what I do is I click on the line right over here, and then this wheel comes over here. So you click over here and then you change the color. So now you have your resistance. You have resistance zone number 1, you have resistance zone number 2. You have your support zone number 1, and that's how far the price would go on the daily time frame. Now, obviously, the price has moved quite far from its previous lows, right? If you measure it from here to here, and then over here, it's pretty much the 50% retracement, it's done. But the important price level that we need to pay attention to is the high of this particular candle, right over here. Can we break the high of this particular candle? At the same time, what we also see is the price really in battle with the 50-day simple moving average, which is right over here. 50-day simple moving average is trading at 32.76. Price is trading at 33.0, right? Or 33,009. So the question really is, are those recession fear correct? Is the economy heading towards a recession? Now, if those things are for real, what we are likely to see, we're likely to see the price moving below the 50-day simple moving average. If recession fear is true, price cannot stay above its 50-day simple moving average. We are likely to see a momentum to the downside and price revisiting this particular price level. In fact, what I would say is that we need to move to a bigger time frame and redefine another bigger level, another next level of support. So if we go into a weekly time frame, over here we see our next sort of a support level, which is right at the bottom of these particular candles. So we have a support level number 1. This is the level which the price came into. It was formed previously. The price came perfectly and then went up. After that one, what we are likely to see is price moving from here to this particular price zone. Or in fact, if I move this one to here, like 29,237 to 29,77, is this area of consolidation is very much focused on. Now, if the price doesn't stop there, then the next level of support is going to be at the bottom of this. That is the level for the Dow Jones Industrial Average. Now, because these are support zones, I'm annoyed with these purple lines because I don't really like the color. Sorry, not the red. We need green over here. So you're going to change the color to green. And we're going to do the same over here. Click on the wheel over here, and then we get our green line, right? So these, number 1, number 2, number 3 are our support zone. As for resistance, our resistance is here, the one which we mentioned before. We can go into our daily time frame to look at that resistance. The resistance is here. And again, you can watch the recording on YouTube again because it will be uploaded over there. Now, quickly looking at the US Tech 100 index as well at the same time, because we wanted to look at how that US Tech 100 index is really performing. On the US Tech 100 index, again, let's quickly change the colors for these ones to red for our resistance zone. Again, I'm going to click on the line right over here, then on the wheel, and then change the color to red. So this marks our first resistance zone, the consolidation area over here. This is our support zone. Again, we will change the color for our support to green to keep things consistent with everything else, and the same for this one. So now the question really is where the price is trading in relation to its support zones and in relation to its 50-day simple moving average. Now, something which is quite intriguing really is that the price is in a huge battle with this 50-day simple moving average. Now, remember, for the rest of the indices, we were trading above the 50-day simple moving average. Now, as for this one, we are already trading below that one, below the 50-day simple moving average, right? Or very much in par with the 50-day simple moving average over here. Now, what this tells us is that the prices are likely, very, very likely to reverse. Prices are very likely to move to the downside. Now, if they do move to the downside, where are we going to see the prices moving to? The prices are likely to move to these two particular zones, right? Now, again, for this one, we have to go into a bigger time frame to get a little bit more data. So we go into our jump into our weekly time frame, see what the price action is saying on the weekly time frame. This is the support zone number 1. This is the support zone number 2. This is the resistance zone number 1, and that is where we are going to be talking about for the timing. We're not going to put our resistance zone number 2 because price is quite far, and then I would believe that this is where it is. Now, as for the RSI, the price is trading near the oversold area, but it is not below the level of 30. If other indices are going to be selling off quite a lot, the Nasdaq, which is already a weaker index, is likely to see a lot more further weakness here, and then could see potentially more further movement to the downside from here onwards. And this is something that we need to pay attention to. Now, I hope that everything over here kind of makes sense. If you wanted to go over things again, feel free to go on YouTube and watch the recording again. Until then, I wish you guys good luck and see you guys next time, same place, same time. And don't worry about the recession and anything else. Pay attention to the price action and the price action only. That's all for now. See you guys next time.